Hi, everybody. I'm Shimon Shkury with Ariel Property Advisors, and today I have here with me my partner, Mike Tortorici, and my colleagues, Howard Raber and Matt Gillis. And what we're going to cover today really quickly is we're going to have a quick conversation about what's happening in real estate, investment sales in Manhattan below 96th Street. Howard, why don't you start us off? Tell us what you see out there, and we'll see how this conversation goes.
Sure. I mean, first, let's look back at 2020, and as to be expected, based, primarily on the pandemic, there was a decrease in activity with about $9.4 billion spent across all asset classes. And this is a 55% decrease from 2019. Talking to investors, possibly due to more manageable pricing, investors were actually looking at the larger transactions, such as 400 East 58th Street, which is a 16-story elevator building with 132 units, which sold for $62 million. So that's something I think as we keep an eye on going forward there.
Thank you.
Yeah, and I think this year is going to be a lot about a return of confidence to the city, and we're starting to see that right now. Residents are coming back, filling up units that have been vacant for a long time. They're doing it at lower rents, but landlords are happy to get them in, and those rents will rise as the economy improves, especially with some of the stimulus that looks to be in the works. That's going to result in, we're starting to see it result in more bids on properties that we're taking to market, as well as a few contract signings on multifamily properties in Manhattan below 96th Street. So the New York comeback is on its way, and we're starting to see that in our sales activity.
Yeah, that's true, and I want to build on what Howard said before. In 2020, it was a tough year, but was one bright spot that was affordable, right? Affordable housing, multifamily did really well, even in Manhattan below 96th Street. We've seen a few, and specifically one large transaction that took place in the Lower East Side.
Right, the Cherry Street deal, which is what, 2 buildings, 490 units, Section 8. It allows for actually more, I guess, stable revenues, right? So it became attractive to investors.
Where do we see the development market today?
So to kind of piggyback on the sentiment, Shimon, the development market's looking up as well, right? What we've seen basically is a softening of the price per buildable square foot. We're down to under $500 for the first time in at least 5 years, right? But what that means is value. When you look at new contract signings for condo sales, I mean, we're basically just had a record month in the luxury condos market in Manhattan, and it's pointing to people are coming back to the city. You're getting a lot of new entrants, a lot of new people coming for work, and overall, I think that will drive development pricing. So there's a lot of value for sites today, and it's worth taking a look at.
Yeah, and I think it's a great point. So the land market presents an opportunity, and we're all seeing a lot of new capital and old capital coming to the city. Let's close it by capital. What kind of capital we're seeing here, and what's our projection for 2021 moving forward from Manhattan below 96th Street? Mike,
so yeah, it's opportunistic capital. Right now, you can buy land at the cheapest price per buildable square foot since I think it's 2013. Multifamily, you can get the best cap rates that you've seen in a very long time in Manhattan. So domestic capital, international capital recognizes that. They're starting to come to the table. They want to see more opportunities, and I'm confident that this year they will. And this is going to be a much more active year for sure than 2020, and we'll be climbing our way back.
Another thing that we're seeing, and I know Howard and I spoke about it a little bit, is local players who own multifamily and other buildings within a certain area are willing to jump back in and buy more at a lower basis, which has been interesting.
Yeah, and I think that goes to the optimism of the market, right? You look at opportunity and you say, okay, I believe in New York. While we may not see a growth in the next year or so, but these owners who have been longtime family owners or type of institutions, that they see 10 years from now, 5 years from now, they're going to see growth in their assets, and they want to still participate and accumulate.
Yeah. So just to summarize, we have lots of capital in the market. Mike mentioned fundamentals are shifting in a great direction. We're seeing more transactions. Land prices are an opportunity. Manhattan below 96th Street is coming back in 2021. Thank you, everybody. And I thank my partners and colleagues here.
Thank you.
Take care.
Thank you.